There's a headline in the Boston Globe, and I've seen these headlines all over the place, so it's not just the Globe that has these ones. Your credit score is excellent, so prepare to be penalized.
This gets my goat, Chuck. Is this really are we really the folks that have been watching their credit score and, being careful and doing the right things? Are we going to be the ones that are going to be supplementing those that haven't had that same approach to living?
Somewhat, yes.
Okay, well, I don't like that.
But let me frame this in terms of what's actually happening, because I've seen a couple of articles that have gotten sent to me where it says, hey, if you're, a good borrower with a good credit score, you're going to pay an extra, 1 to 1.5%.
That sounds high.
And if you are someone with a bad credit score, you're going to end up getting, a reduction or a credit of, 1 to 2%. Let's back up and talk about what's going on here, because there is no scenario in which someone with good credit is going to... Let me talk about what these are first, okay? This is referring to what's known as the Loan Level Price Adjustment, the LLPA, which is a term that you've never heard before and you'll never hear again.
Never going to hear it again? Why? Is it not going to get passed?
It's just no one cares about this except when they're trying to make sense out of this
Alrighty.
stuff. It is a charge that is imposed by Fannie Mae and Freddie Mac. Yep. That gets wrapped into your mortgage payment.
Okay, so it's not an extra line item that will be clear to you that, hey, you're a 750, you're going to have this additional charge right here.
It's built right into your principal and interest. The rate that you get quoted from the bank includes this.
Okay.
Always has. This is not something that's new. This has been in existence for years.
Oh, so this is not new.
LLPAs have been in existence basically since the agencies have been around.
All right.
Okay. What's happening is that every so often, the agencies get together and they say, hey, do we want to change these loan level price adjustments? Mm-hmm. And that's what they did at the start of this year. What they did is for certain subsets of borrowers, they reduced them, primarily people with credit scores below 680. And for certain segments of the population, they increase them. And this is, again, only for new loans. If you have an existing one, it's not going to change how much you're paying on an existing loan.
They're not going to take your house and your loan.
No, they're not taking your house. Okay. They're not changing the loan that you've already agreed to. None of that's happening.
Okay.
But as an example, if you had a credit score between 720 and 739, and you're borrowing between 80 and 85% of the value of a home,
common,
your loan level price adjustment is going to go up by 0.75%.
That actually is a lot.
It's meaningful.
Yeah,
it's a meaningful adjustment up.
Ouch.
Okay. On the other hand, if you have a credit score below 640 and you're borrowing that same amount between 80 and 85% of the value of a home, your loan level price adjustment is going to drop by 0.3%.
Okay, wait. I just came up with a great idea. You know how before you go to buy a house, they say, don't do anything. Don't buy a car. Don't open a credit card. Maybe you manipulate your credit score right before.
Horrible idea. Here's why. Okay? Remember, these are the changes from what they were before.
Okay.
Here's what the actual loan level price adjustment is. If you have a score between 720 and 739 and are borrowing 80 to 85% of the value of a home, your loan level price adjustment is 1.25%. That's how much Fannie and Freddie say, hey, here's the extra that we need to compensate for that risk.
Okay.
If your credit score is below 639, and again, you're borrowing that same 80 to 85%, your loan level price adjustment is 2.875%.
Okay.
It's more than double.
Over the...
Yes. So what is happening is the extra that was, being charged to poor quality borrowers
is reducing.
It's being reduced.
Yes.
And you're seeing some of that pushed upwards. Now, do I think, based on recent history, that it is a great thing for us to start pushing, excess credit to people who have proven to be unworthy borrowers in the past? No. I think that is a very bad idea, and I don't think we should be doing it. To be very clear, the idea that we need to make it easier for someone with a sub 640 credit score to buy a home with less than 20% down.
It ended well. It didn't really end well the last time.
I think that's a bad idea, plain and simple. But under no circumstances in the chart that is here from the agencies will someone receive a cheaper mortgage by virtue of having a lower credit score.
Oh, okay. Yeah, so it's a bad idea to go out and destroy your credit score.
The loan level
to get
price
a
adjustments go up as you go down in credit for every single amount that you could potentially borrow.
Right. So there was adjustments in there, folks, and these adjustments have just been tweaked a little bit so that you're not being advantaged as much as you had been previously.
Yes.
That's a good way to look at it.
Yes. Now, I still don't think it's a great idea to be making it easier for someone with a 610 credit score to buy a home.
No, it's not. It's a terrible idea.
But there is no scenario, and you can pull the tables directly from the FHFA. There is no scenario where you will have a larger adjustment by virtue of having a higher credit score. The higher your credit score, the cheaper it will be to borrow based on these LLPAs. Okay, that's the only part I'm talking about. What bank you use and this and that, like that might determine your overall rate. But the loan level price adjustment in every single borrowing category is lower if you have better credit.
And, we were just talking about, demand for housing. And, I don't think that this is going to make it doesn't make more affordable homes, right? That's not part of the equation. If you're trying to get people into homes, well, housing is still expensive. So that person that has that lower credit score, it's not really helping them to get a cheaper home. Like, oh, hey, we built all these, $150,000 homes for you to buy now. No. So now this person that is having challenges with their credit are trying to buy a house that's more expensive in a higher interest rate environment. It's just not a good idea.
If someone has a credit score of 600, they probably don't have the down payment needed to buy the home anyways.
Right. Yeah.
So, again, I don't like these adjustments because I don't think they make sense in the context of what was proven to not work in the last 2 decades. But it is not something where you are going to be paying more for a loan relative to someone who is a worse credit risk.
So I think I'd look at this, too, almost as, these folks in that credit range, the lower range, they probably won't even be taking advantage of this. The only ramifications of this adjustment is probably to the folks that historically are getting the mortgages are simply going to pay a little bit more for those mortgages, right? In other words, the teeter-totter isn't really happening. It's only one side of that teeter-totter that's being affected. Yeah,
it's just, again, use that kind of base, 20% down. If you've got a FICO score above 780, your loan level price adjustment is 0.3%. That's the extra that you have to pay.
Yeah.
Whereas if it's below 640, you got to pay 2.875. It's going to be a 2.5% higher rate that you pay if your credit is worse.
Well, hey, you're better off if you have a tough credit. Work on it. Work on it, people.
Yes.